Hello ladies and gentlemen, and welcome to the Strategy of the Week for the 24th of May 2013. My name is Dan Misch, and I'm the Director of Retirement Services for VectorVest, and we'll present tonight Do Right with VST. The three most common questions we receive are: what is the best timing signal, what is the best search, and what is the best stop criteria? Well, with as popular as VectorVest is, and with as many different types of investors that use our service, the answers become challenging to resonate with everyone. When we find something that works and shows consistency, we feel obligated to share it, and that is what we will do today. To answer the question regarding market timing, I have loaded up a market timing graph with the ProTrader Timing DEW layout. Now, this is a unique timing system that uses technical analysis for its up and down triggers. We have upper and lower envelopes surrounding the price of the VectorVest composite for Australia. The white line intersecting the VectorVest composite is a 30-day weighted moving average. And down below on the subgraph we have a DPO, which is a detrended price oscillator. A DEW up is signaled when the price of the VectorVest composite closes above the 30-day weighted moving average and the DPO closes above zero on the same day. And just the opposite for a down, the VVC would close lower than the 30-day and the DPO would be down below zero. By putting on the signals, we can see the past year's worth of ups and downs as indicated by the green and red arrows. These first signals back in July of 2012 appear to have been in a whipsaw motion, and we will test how our system performed over this time. And throughout the year, we have some longer runs both up and down. I will point out that as of today, we do have a DEW down signal, and again you can see here that the closing price of 2.21 is less than that 30-day weighted moving average, and the DPO has gone negative down below zero. With our timer in place, we need to answer the question regarding the search we should use. I've moved us over into the Unisearch tab, and we have a group that is called Search is Prudent, and it has some really great choices, including high VST newcomers. This search is going to find stocks whose VST rating has increased to above 1.4 within the past week. The stocks that are meeting that criteria are then sorted by VST to bring the best to the top of the list. So this search, in conjunction with that DEW timer, gives us a great opportunity to buy a rising stock in a rising market. Now, to answer that third question about a stop criteria, we are also going to use VST. So we'll take our DEW, which is our when to buy, and we'll take this high VST newcomer search, which is our what to buy, and we're going to put it through the back tester to check the viability of this trading system. The first test was run over the past 1 year, from the 24th of May 2012 to today, using the DEW timing system and buying those stocks from high VST newcomers. Now, we bought 5 positions all at once, and here you can see we are using a stop of a VST less than 1. So anytime one of the stocks we own, which has just moved up above that 1.4 level, if the fundamentals and timing break down to drop that down below 1, we will exit that position. All of the settings for these tests we're looking at can be found in the views this evening. Using that stop of a VST less than 1 allows us to hang on to some quality stocks through the market's up and down gyrations. Now, on this first test, we also did not sell any positions when a DEW was signaled, and so I've labeled it no action. And as you can see, we've grown our $25,000 portfolio by 56, almost 57% in the past year. That only came at a cost of $100 in commissions, and we're using $20 per trade. So the annual rate of return is also near 57%, and our drawdown was only 11.5%. And you can see down on the graph below that we've had a very good year with this test. If we look at the 5 current holdings, 3 of the 5 were purchased back in July of 2012, and that's when those first signals came onto that market timing graph we were looking at. Should also point out that one stock we have in here has a 218% gain. That's Magellan, which has had a very good year, and this is one of those stocks that was found at that first signal back in July. And since this portfolio takes no action on DEW down signals, it will continue to hold these 5 positions as long as that VST stays up above 1. And if we look at the watch list view, you can see that these still have from a 1.2 up to an excellent 1.4 VST rating. Now for the second test we've run, I wanted to check what happened if we did sell all positions at the DEW down. So the time frame is the same, the stocks are the same, the signal is the same, and we're still using that VST of less than 1. And now we have a loss of over 4% for the year. It came at a much higher trading cost, and our drawdown increased to 20%. All 5 of these positions will be sold on the next trading day due to today's DEW down signal. So in that short term, it looks like taking no action was the right way to go. But to really put this to the test, I checked with our developers to see how far back we have data for this setup of the DEW and this high VST newcomers search. And we have that all the way back to February in 2007. So that gives us over 6 years of research that we can analyze. So here's the first one we'll look at, which is high VST newcomers taking no action, and I've put all on there so we know it's all data. Again, from the 20th of February in 2007 through current, we have a total 67% gain, which is great, and it came at a fairly low cost, over 6.5 years almost, at $900 in commission. But look at the graph down below. You certainly have gone through some swings up and down, and you have a maximum drawdown, which is over 40%. Very uncomfortable. Looking at these 5 holdings, you do have 1 purchase from 2009, 1 from 2010, 2 of them from 2012, and 1 recently in 2013. And again, with no action, this will continue to hold on to those positions as long as that VST holds up. And for the last test, I did sell all shares on a DEW down signal, so it says here that we went to cash, and again we have all the data. Now our total gain is up to 163.5%. That gives us an annual rate of return of over 26% over the last 6 years. It did come at a much higher cost. We have $5,700 in total commissions here. Well, at $20 a trade, that's 289 trades. And we've got about 75 months worth of data here. So you're doing between 3 to 4 total trades per month to grow your $25,000 portfolio to $65,000. And look at the graph down below. Starting back here in 2007, we did go negative slightly, down to a loss of about 4%, before climbing back up above our original investment and making money almost every year. If we go forward to the 20th of February in 2008, the portfolio had a 27.5% gain in that first year of trading. Move forward to the same date in 2009. Now it's up to 33%, which is a 5.6% return for the year. Jump forward to 2010. We're now up to an 89% return, which is a 56% lift over the previous year, and a very similar story in 2011, when the portfolio had another 55% total gain. The one bad year was from 2011 to 2012, when this portfolio did suffer a 10% loss, before jumping to 2013, which was an amazing 71% gain over the previous year. And you can see some of the steepest decline we've had has been in this recent time frame of February of this year, moving to where we are current. This does have 5 holdings in it, and since this one goes to cash, we will sell all those positions at the next day's trade. We have currently 3 losing trades and 2 with slight gains in there. All recent purchases. So for a comparison, here we are looking at the graph again, and once again it looks great. Let's compare that over the same time frame to how the overall market has done as measured by our VectorVest composite. Here's the price of the VVC from February of 2007 to where it hit its peak later that year in 2007. Came all the way down through the global financial crisis, bottomed out in March of 2009, and has climbed to where we are today, which is still lower than the original start date of 2007. In looking at this graph and comparing it to the graph of our backtest, it becomes very easy to decide which one you would most like your portfolio to resemble. Well, we're going to keep working to find these when to buy, what to buy, and when to sell strategies for you, and we encourage you to do the same. If you have any questions for us, please call the number on the screen or send us an email. Thank you.